Hello, everyone, and welcome back to Genius Wednesdays. Today is Wednesday, February 12th. It's been a crazy week in the market. Alts are up. We have reports from our team Genius, and we're going to be doing something a little different today. We're going to break it up in segments to give you guys a highlight of the crypto market, the global markets, regional drivers, correlations, and as usual, we will go through some charts and summarize our weekly market calls. We're also going to be hearing from Dustin Minch, our mining expert, and Hash It Out, some quant reporting and compliance and regulatories. So lots to unpack. I will turn it over to Mr. Steve Kwan and Team Genius.
Well, since I consider you all friends, and I guess over history, the stars have been known by one name. I used to be known by Quan exclusively, so you guys can all just call me Quan from now on. But I'll start with the basic, the one that most people say, oh, crypto, that's like Bitcoin and stuff. So this would be a chart of Bitcoin and stuff, or also known as Bitcoin in US dollars. Most of you are probably familiar with this. Fairly sharp gain, about 5.5% this week. Nothing too exciting to show there. Now we will show over the past month, it's kind of been a little engine that could, not overextending, rally, give up a little, rally, give up a little. Each time the low is higher, the high is higher, and you're starting to build an upward channel. Next, we have what I refer to as the spreads. Why are the spreads important? Because Bitcoin US dollar price still dominates the US dollar price of the crypto that you have in your account, since it accounts for 60+% of the exchange listed blockchain and crypto market. But I look at primarily what I call the original Coinbase coins, which are Bitcoin, Ethereum, and Litecoin, and I see how those other two are performing versus the big dog. I wrote a piece yesterday, which some of you may or may not have seen, but it's specifically on Ethereum. I've been talking about this one for the past 3 months, so I'm not one to just jump on the bandwagon. I've been kind of preaching this since the Ethereum Bitcoin spread was 0.016, 0.017, 0.018. Now it's 0.0256, so it's started to gain and it's starting to get some serious traction. Here you can see Ethereum priced in Bitcoin over the past month moved from 0.019 to 0.0256, so rather sharp move. And that said, when you get a positive Bitcoin market in US dollar terms, coupled with a blockchain project increasing in Bitcoin terms, you get the quote unquote slingshot effect where the gains are outsized. And this also happens on the downside, hence the alt massacre or the alt bear market, whatever people want to call it. I'm the first to say that when Bitcoin goes up and I hear, well, other things have to go down. No, they don't. Nothing has to do anything. That's what many people's belief is. So if you're able to be ahead of the curve and say, well, this price doesn't make sense, I'm going to move my Bitcoin into ABC or CYD or ETH or LTC or whatever crypto you follow, you can be one to break the trend. Now, I'm not saying jumping in front of a moving train is a highly advisable summer activity, but it's worth entertaining that 2 months ago, 1 month ago, 3 months ago, Ethereum, Litecoin, Bitcoin Cash, Ether Classic, Dash, some of the large or mega caps, as I call them, were just sitting there for the taking, but not many wanted to pick up on it. Now I'll move forward to a 1 week chart of Ethereum, and again, another sharp gain, but I guess the reason I even bother to show a 1 month or 1 week is that you have 1, 2, 3, 4, 5 days of essentially consolidation, very quiet, and then all of a sudden somebody wakes up and says, well, this doesn't make that much sense. I'd mind you that multiple large bullion dealers are now accepting Ethereum as a method of payment. So that was written in my Ethereum reports, where now Bitcoin is as good as gold. It has been for multiple years, according to bullion dealers, and now Ethereum is. The next is going to be Litecoin. This is Litecoin on a 1 week basis. It has not taken out its 1 week high, but I'm not going to make predictions, but I have some ownership in it, so that should say what my prediction is. Now, this is a 1 month of Litecoin Bitcoin. And as you can see, this has moved from 0.00625 up to 0.0075. So these are positive things for the blockchain space, the blockchain asset class, the blockchain industry. I've said it before, I'll say it again. Bitcoin only, where other things are going to zero or to infinitesimal amounts, that ends up being a commodity mining space where it's very similar to gold mining. There's gold and there's very little else. I mean, silver is a byproduct of copper, and palladium and platinum are, they're industries, but they're very, very tiny industries in comparison to gold. And over the past month, Bitcoin dominance has moved to 68 to 60%. I would note that in the alt run of 2017, early 2018, Bitcoin dominance moved from 68% to 31% as many moved their asset allocation from Bitcoin only to other things. Whether it got overextended or not, I'm not one to judge other people's investment decisions. But I would say this wholeheartedly, that Bitcoin dominance decreasing has a very large correlation to the global market of cryptocurrency increasing. Here, I just wrote that out. And that would be the first sector. So, Christina, I would pass it back to you.
Great. Thank you, Steve. Okay, so for this, we'll turn it back over to the team roundtable here. We're going to speak specifically about the crypto market and the trends that we saw in the last week. And the next segment, we will move into the correlation with the global markets, S&P, VIX, Euro, LIBOR, precious metals, things like that, of course, interest rates. But with the crypto market, so much happened this week. There was so much, there were so many gains, across the board with TA and fundamentals. I'm very interested to turn it over to the team and hear your feedback on what you think is happening and what you think the drivers are.
Yeah, I can go ahead and kick it off. This is Jeremy. So yeah, very interesting markets, as you had mentioned. Steve, great analysis there. Yeah, there's a lot of interesting drivers, especially from a macro perspective right now. I think it's pretty safe to say that, Bitcoin is in that class of what you call safe haven assets. We're seeing other types of assets that typically act as a safe haven, including gold, are moving in a positive direction from a global economic perspective, from the perspective of what's happening in China with the coronavirus and literally cities shutting down completely. We're seeing slowly a ripple effect, across different economies and supply chains. It's just a matter of time before that reaches the U.S. I mean, we're probably seeing it right now, and it's affecting certain companies. You hear of Apple, having their one of their factories being shut down as well for a while. So this will have a direct impact on the U.S. economy. It's just a matter of when that does happen, and when numbers come back. And people understand the implications of what's going on overseas, because there's so many interdependencies between China and the global economy. It will impact the stock market, and I think people that are in tune with these things are hedging against that potential risk by, like I said, moving into more safe haven assets. So I think that is one of the biggest drivers as to why Bitcoin is moving up. As I had mentioned, we had talked about Tezos as an organization. We had talked about Ethereum, Litecoin, Dogecoin. There's a lot of these coins that we had talked about, moving up, and some fundamentals behind why we're seeing that come to fruition. So well done, team, once again, for anticipating some strong movers. One of the things I think I'd said, which is, my prediction was, I think that we're going to have one more, as people call it, I don't like to call it this, alt season. I think it's going to happen because everything's really attached to Bitcoin more than a lot of people think. I think they're, as retail investors come into the space, they don't know what they don't know, right? So they just look at a bunch of coins on Coinbase now. And somebody said something really interesting, which is, can you imagine the people that got out in 2017, 2018, and then they come back a year later to Coinbase and they see all of the coins they can invest in, some of which are only, a few cents to buy. That's a vastly different market than it was, in late 2018 or early 2018, as the market just completely crashed. So I think we're going to see a strong pump continuously with a lot of these alts as we're seeing now. Some of them are just moving up tremendously. Decentralized finance and everything going on, and the staking wars that are happening, to where things like Tezos, you put your money on Coinbase and you're literally earning 5.36%. Now Binance is releasing that. Other exchanges are as well. So you're making more money holding your money in crypto on an exchange than you are in any bank around the world. That's very compelling. So I think that's driving a heck of a lot of adoption and anticipation as to where these coin prices could go.
Nice. Thank you, Jeremy. Matt, I'd like to pick on you, just really quick summary around the crypto market in the last week or so, and then we will move over to the global indicators.
Sure. Can you give me another minute so I can look at make a few references here and
Sure.
cross some
Yeah,
T's,
we'll
dot
just,
some I's, and yeah.
You betcha. You betcha. Well, then in that case, Steve, I'll go ahead and turn it back over to you so you can continue with your presentation, and the team will have lots of feedback as we wrap up.
All righty then. Moving on. This chart's getting a little bit old. You pretty much could show this 1 week or 1 month chart for most parts of the past few years, but I show it as I learned on the fund desk that the S&P is the proxy for the U.S. economy that the Federal Reserve officially or unofficially looks at. So we can see here over the past month, this dip was based on the scare in China and the scare in the Middle East. As we can see, it was sharp. It caught some people that were highly leveraged, but once again, it's back to all-time highs. Now here's gold over the past month. It's gained slightly, but far from an exciting trade. I wanted to put these headlines out that I happened to see today. Precious metals slip with silver at a 3-week low as stocks rally on reduced coronavirus concerns. Another was U.S. stocks rally to all-time highs as coronavirus concerns ease. So that kind of goes along with what I was saying of, if the economy's bad, you want to buy stocks. If the economy's good, you want to buy stocks. I say that somewhat as a joke, but a wise man once told me that he's seen quite a few traders go broke or get walked out by trying to short the stock market. I'm actually not a buyer, but at this point, there's so many external forces in there that are much bigger than anyone can imagine. It will happen eventually, but I'm not the one to try to call tops in the stock market. Moving on. Now, this is 1 month, and this is one of the most important things that I watch. This is Eurodollars, which essentially are the inverse of interest rates. So one would take 100, roughly for a guesstimate, 100 minus the Eurodollar price, and that would give you the interest rate. Hence, interest rates are 1.57% or 157 basis points. Now, there was a little bit of a concern here where it might go down. Maybe it will, maybe it won't, but as we can see here, it's still right along this line and trending towards flat to lower rates. Why is this important? You know, maybe you guys don't trade euro dollars. Well, let's look at another thing. Well, here's the yuan versus dollar over the past month. So we can see that there was a sharp move up where it cost more yuan to buy a dollar at the same time that the equity market took a sell off and the euro dollar spiked to multi-month highs. So this is another key driver where watching the yuan, regardless of coronavirus or not, has been a driver that's been important for the past year. And this is 1 year yuan dollar. So we can see that there was a rather sharp move up. It topped over the summer and has since been decreasing, but has kind of found some footing around the $6.90 to $7 area. Well, let's look. Two charts that are correlated don't really make a trend for me. I'm involved in mixed martial arts, and so is my son. We have this theory. The first time's an accident, the second time's a coincidence, but we don't believe in coincidences. The third time, well, you best believe it because something's going to happen. So let's look at euro dollars over the past year. So I'm going to highlight this again. Watch from March to summer. Sharp move up. Let's look at yuan dollar. Sharp move up. Let's look at euro dollars. Well, anyways, that was there was a sharp move up in all of them, and here is gold. Again, the laggard, but sharp move up, topping in the summer. And last but not least, oh, here's Bitcoin. Sharp move up into the summer, then kind of has been bouncing around. And as exciting as 10,300 Bitcoin is, it's still not totally out of the clear. There's a major resistance pool right at the current juncture. The next resistance pool would be near the 12,000 area, but it needs to clear this and do it quickly. Otherwise, and there are many of these traders out there that are willing to buy something, take a huge loss, and when it gets back to that price, they are willing to get out. It's not a style I use because taking losses to break even usually doesn't work well over time, but that's how resistance and support ends up happening. And lastly, Christina, I'm just going to move ahead on my personal call of a top mega cap or large cap, I guess, that's been scraping along the bottom and really hasn't found that extra push. Jeremy mentioned it. It's one of my son's favorite projects. You can actually find it in this video game for kids called Roblox, and it's called Dogecoin, Dogecoin, whatever. This is its price in Bitcoin Satoshis. It's been scraping along the 25 to 34 area now for pretty much 7 months. Now, based on the theories that I've used to get involved in Ethereum Classic, Dash, Bitcoin Cash, regular Ethereum, and Litecoin, which have all worked, this is something I'm putting some emphasis behind, so to speak. And here it is over 3 months where it becomes very apparent you're in this channel, and it's worth putting on your radar. So that would be my market call for the week. I'm interested in putting some energy behind that project. And on that note, I will stop the screen share and pass it back to Christina.
Thank you, Steve. All right. So that was super insightful. Before we move to any of the other topics for today, does anyone have any feedback or commentary on Steve's presentation?
I do, actually. It's Dustin. Can you guys hear me?
Yes, by all
Go ahead.
means.
Yeah, I was more interested. I just was wondering if Steve could elaborate a little bit more, because I know that he mentions the euro a lot, and how, like, does it correlate to the price of Bitcoin, or is it hinged to, it seems like it correlates with the price of a lot of things. You keep mentioning when the euro goes down, that's not a good time to be in the stock market. Is it the same with Bitcoin too as well, or how is it?
Okay. Hey, Dustin, so I want to clarify, because there's the currency pair, the euro dollar, euro versus USD.
Correct.
There's also euro dollars, which are basically an interest rate tool where, for lack of a better term, they're the inverse of LIBOR. When I'm showing those, and here I'll go back to screen share.
Yeah, for some odd reason, my screen isn't sharing.
Okay, give me 1 second here. I'll pull back up, and here. So the symbol for euro dollars is GE. That's when I say euro dollar, this is the actual euro dollar future, which is the inverse of LIBOR. So as euro dollars are increasing, LIBOR is decreasing. And I'm not going to say that the euro currency doesn't have a correlation to a lot of things. It absolutely does. But I guess a la what Jeremy said, where someone is now offering a yield in Tezos, or I'm not too familiar with that project or which currencies are offering a yield. I know that many offer the POS type of yield or masternode type of yield, where people are incented to hold their coins in a wallet or masternode or what have you, and they earn some extra coins. So think about this. If Jeremy just said that 5% was what someone can earn in Tezos, and LIBOR is 1.5%, and both are relatively stable, let's just say Tezos price wasn't moving at all, wasn't going up, wasn't going down, that'd be a great trade for someone with a large amount of capital, as they could collect 5%, convert it back to their local currency, and basically have an arbitrage. Obviously, there's more volatility in cryptocurrency, but as interest rates move down sharply, most assets that I look at get more attractive, whether that's equities, gold, crude, corn, cotton, gasoline, natural gas, Bitcoin, shitcoin, Litecoin, whatever. And you can see this, I guess, from if one looks back at early 2019 through the summer, you'll see euro dollars, or i.e. LIBOR decreasing sharply, and the whole crypto space moving up sharply. Then in the summer, when the Fed, I guess, disappointed and didn't put rates to zero or whatever ridiculous number the funds wanted, that's when things flattened out. And I'm not going to say that there's not other drivers. I know that Brexit was a driver, the yuan pound was a driver, but I guess in general, I just try to share information that's worked for me. I never ever tell people what to do, because when people start to tell me what to do, I get turned off. So I'm just simply want to point out that if one keeps an eye on LIBOR, if they have a cryptocurrency position, I've found it to be something that's advantageous for me.
Makes sense to me. Thanks, Steve.
Yeah, it makes sense to me too. Thanks.
All right. Well, we are going to pivot into the other segments of Genius Wednesdays. Dustin, since you had volunteered and it is time for Hash It Out, I will turn the floor over to you.
Okay. So there's, with the mining space, it's been quite unprofitable for the better part of a year. And this isn't the first time that it's happened. It's kind of just like the market. It's a market cycle with it. And so it's kind of an interesting time right now to look at cryptocurrency mining because the profits are starting to creep back in. A lot of the hardware is still kind of relatively cheap. And so, a lot of people ask me, it's like, well, what happens if this, if what happens if, because right now the coronavirus, it's affecting a lot of the ASIC miners being shipped out and everything. And so people are like kind of concerned, like, well, what happens to Bitcoin if all these miners in China unplug because of the coronavirus? And so it doesn't really affect the market at all. So essentially, if they unplug, there's going to be a lot of other miners that are going to see the difficulty drop. They'll plug their machines in and scoop up the Bitcoin as well. So it's not going to affect the market at all. If anything, there's going to be some lucky miners that earn some pretty high yields on Bitcoin. So I've been asked that question a lot, lately about, what happens if all those miners over in China unplug. Is the network going to fail? And it's not. It's just some other mining pool somewhere else in the world will pick it up. And so that's kind of the advantage to being a distributed, decentralized network. As far as like people that are looking into getting into mining, I know that Ethereum mining hasn't been quite profitable. There's ASIC miners that have invaded the market. There's ProgPow. Everybody's waiting on ProgPow, which is a algorithm that's specifically designed for GPU miners that does not allow ASIC miners to mine on the network. And, we're still waiting on that audit to happen. So there's a lot of people that are kind of disappointed because this code's been now written and, everybody's waiting for Ethereum to adopt it. And so it's kind of an interesting time to look at that. But, on the side note of things, it's not really, you still can earn an income mining Ethereum. It's just not as high as it was back in 2017 or 2018. Now, as the market continues to go up, the profits will they will go up higher. And so more people will start mining again. So what's interesting is, sorry, my dog's barking. What's interesting is that it's kind of the exchange of hands, kind of like the same thing with the altcoin market. A lot of weak hands got shook out. And so with the mining market, a lot of weak hands got shook out. They're selling their hardware for relatively cheap. The more experienced miners that have been through this before are picking that hardware up for pennies on the dollar. And so what I suspect is going to happen is that, the market, the mining profits are going to return again, probably in the next 6 months. We will start to see that there's going to be a shortage of graphics cards. And that's when the market prices for hardware is going to be 3 to 4x. And so I've been kind of preaching to people right now is the best time to look at getting back into cryptocurrency mining because the mining hardware is relatively cheap. Yes, it does project that, it's going to take you 1,000 days to get your money back on that graphics card. But once the market continues to go up, your ROI times will they should go down, right? And so, I know that there's a lot of people that are asking, well, what happens when Ethereum goes to proof of stake and mining's done? Well, the beauty of that is that there's other coins that you can mine out there. And so, you got Beam, you got Grin Coin. Those are pretty profitable coins that you can mine right now, other than, obviously Ethereum for a lot of the AMD users. And so that kind of brings me to my closeout thought is there's a new coin out here that I'm actually looking into mining. I'm mining it currently right now, and it's called Handshake. And so, I'm still trying to understand it, but there's a lot of momentum behind that project. And essentially what it is, it's a censorless version of the internet. So, a lot of us in the United States, we don't experience this because our government doesn't block our internet. We can access Facebook and all these other things on the internet. There's no censorship here, but in places such as China, India, things like that, their internet is limited. There's certain websites they can access and certain websites that they can't. And so I think the biggest thing that this new coin called Handshake tries to solve is, creating that version of the internet that the government cannot censor out. And so There's, like I said, there's a lot of people that are kind of backing this project. It's gaining some momentum. There's some pretty bold claims being made, but if I had some spare graphics cards laying around right now, which I do, I would be looking at trying to get into mining some of that. And so, that's really it. But I'm planning on putting a guide out to show people if they got any graphics cards laying around, just to kind of show them how to start mining that newer coin. So that's really it with the mining market right now.
Thank you, Dustin. Just as a quick plug, Dustin can also be found in the Coin Genius Discord in our mining channel. So beyond just the GPUs and the ASICs, there's also coins you can mine with an old laptop. There's coins that you can mine with a cell phone. There's a ton of opportunity. So we'll be coordinating all of that information and making that available to our users. All right. So we're going to move over to compliance and regulation now with Samson Williams. Samson, would you like to give your thoughts on the market this week?
Hey everybody, this is Samson. I take myself off of mute. Yeah, I think there's a few big things. I have like 5 things. I'll try to get through them quickly. I think we are in store for another alt season only because, as Jeremy mentioned with China, we won't really see the slowdown for the next 45 days. So you should really look out for April. What happens in shipping and manufacturing is that when you quarantine entire cities who produce some type of widget gadget for a product here in America, it gets just backlogged by 45 days, in which case they'll really start feeling that pain, because to restart that supply chain process is a monster. And so China will have to do something, probably weaken its currency, and as a result, that will cause some conflagration with our current trade deals with China. So all season is probably coming back for that reason too. Also, people are playing with house money. For those of us who cashed out in 2017, in late 2017, early 2018, we have some house money to play with. So that's going to be lots of fun. The other big things that happened, just to put this on your radar, if you haven't checked out this article from CoinDesk about Inside Chain Analysis multi-million-dollar relationship with the U.S. government. So in 2015, Chain Analysis, they do blockchain surveillance. They had a $9,000 contract in 2015. In 2020, they have $10,690,000 worth of contracts with the U.S. government. And again, that's just for looking at transactions on blockchains. So if you're out there trying to do something nefarious or questionable, the Commodities and Future Trade Commission, these are the list of clients for Chain Analysis. The Commodities and Future Trade Commission, the DEA, the Drug Enforcement Agency, the FBI, ICE, the IRS, the Securities and Exchange Commission, as well as the TSA. Those are all clients of Chain Analysis. So FYI, Big Brother's always checking you out. I think one of the other big deals that happened that's actually going to impact the price, or impact the market, I should say, is that on February 6th, Hester Pierce, she's the commissioner of the Securities and Exchange Commission, she proposed a token safe harbor proposal. And so this is actually pretty interesting. When you guys get a chance, I highly encourage you to read it in its entirety. I'm only going to very briefly skim it. It's like a 10-page document, but we're just going to skim it to bring out some of the highlights. One of the more interesting sentences is that this is a quote: "A token may be offered and sold initially as a security because it is wrapped in a transaction involving an investment contract, but that designation may change over time if the token is later offered and sold outside of an investment contract." So that's interesting that the SEC is acknowledging that, and then they give an example. For example, a token sale may no longer be a sale of an investment contract if purchasers can no longer reasonably expect a person or group to carry out the essential managerial or entrepreneurial efforts. And so that's the end of that quote. And so I thought that was interesting because the first thing that popped into my head, which has nothing to do with crypto, but probably everything to do with microtransactions in the future. Recently, Tesla, the car company, they disabled the self-driving feature on a Tesla that had been bought at auction because Tesla contended that the self-driving feature was an upgrade that the person at the auction hadn't paid for. And so I could sort of see where if we say that these tokens or securities can evolve over time because the nature of the token evolves over time, where a company could, if you transferred it to someone else, just say you don't have access to that feature of the token. So that's actually not related to the SEC's thing, but it's just a interesting aside, because nowadays you can buy a good product or service, but you might not actually own it. It's like the example of the Tesla, you have a perpetual lease. But going back to the token safe harbor proposal from the SEC, it talks about the initial development teams, and it says upon conclusion of the 3-year period, the initial development team must determine whether token transactions involve the offer or sell of a security. And in that line, it just means you should get a lawyer. Ultimately, at the end of this document, the conclusion was it's actually just cheaper, more cost effective to just do some sort of Jobs Act crowdfunding under those exemptions, whether you're doing Reg CF, Reg A, Reg D, etc., than to go through this proposal. Because this proposal, as we'll hit up 3 more points, is actually more onerous from the sense of reporting requirements than just current exemption or current fundraising mechanisms. So one of the other interesting things underneath Section A exemptions is that the initial development team intends to and will undertake good faith and reasonable efforts to create liquidity for users. If the initial development team attempts to secure secondary trading of the token or token on a trading platform, it will seek secondary trading platforms that can demonstrate compliance with all applicable federal and state laws and regulations related to money transmission, anti-money laundering, and consumer protections. So when you actually get the document up that's under exemptions, sub bullet 4, you're going to have to find an exchange that has AML, probably has a BIT license if you have any customers out of New York, or has a money transmitter license if you're anywhere else. In America, you always have to have a money transmitter license at a minimum if you're a wallet custodian. So again, this is going to be interesting because it falls to the initial development team to vet out the exchanges. So when it comes to disclosures, Section B disclosures, bullet point 1, you have to list your source code so it can be audited. And that's interesting because if you have some kind of secret sauce or specialty within your source code, from a business perspective, do you actually want to do this? Do you want to say, hey, let's lift up the hood and show everybody our business just so we can get this 3-year exemption, which ultimately has more reporting requirements than current crowdfunding regulations. It talks a little bit about your tokenomics. You have to state that. One of the interesting parts about tokenomics is bullet point 4 is sufficient information for a third party to create a tool for verifying the transaction history of the token. And so we just talked about what chain analysis was doing for the CFTC, FBI, IRS, SEC. They had $10 million worth of contracts. So if I was chain analysis, I would love this token safe harbor proposal, because now it's saying, hey, if you want to use this token safe harbor exemption, this 3-year exemption, that's great. Here's a tool so that we can do surveillance, or we can audit your transaction history. So I think you guys should keep in mind that it might sound like a great thing, that it's like, oh, we're getting 3 years to grow up into a real business, to develop a network. But really, it's sort of like I called it police entrapment, meaning you self-report to the regulators everything that they want. You meet these onerous report requirements, you meet these compliance issues. And so now, 3 years later, if you've made it, brilliant, they'll come hit you with some fines or with some fees to say, here's how you stay in compliance. If you didn't make it, they'll probably just let it go because you're not worth pursuing. So the whole article is very interesting. The last thing I'm going to point out is that in Section C, filing of notice reliance, bullet point G, and they talk about the definition of a qualified purchaser. And it says, for purpose of Section 18B3 of the Securities Act of 1933, that's also the code for get a lawyer, a qualified purchaser means any person to whom tokens are offered or sold pursuant to reliance on paragraph A of this section. That it also loosely translates out to get a lawyer, to understand that. But more importantly, they have a definition for a qualified purchaser of these tokens, which aren't securities when used underneath this token safe harbor. That has a window, an opening, a glimmer of hope for maybe modifying the definition of an accredited investor. And so when we're looking at when businesses are looking to raise money in the space, they're always going out to their customers, they're going out to their fans, they're going out to their users, and they say, hey, we would like you to invest. But many of the users aren't accredited investors, so they can't take advantage of some of these other exemptions like Reg D. And so if they're coming up with this definition of a qualified purchaser and saying that you're not buying a security, that might be a doorway into actually redefining what a quote unquote accredited investor is. So those are some of the highlights from this week from the compliance and regulatory side. They're not too exciting on the face of them, but I think that because of this token safe harbor proposal, you'll have a lot of people who want to test the depth of the river with both feet. So you'll see a uptick in the alt season as everyone is trying to rush in, and they don't know like the nuances of what it actually takes to launch and start a successful blockchain project.
Samson, this is
Yes,
Steve.
Steve.
I'd actually like to add a comment, Christina, if I may. Like to give a shout out to a couple friends, Dave and Alan, who were kind enough to get me tickets to Blockris. It's a play on Blockchain Congress. It was in Chicago. It was one day. And I actually had the honor of talking to Hester Pierce in person. And I know I'm a little outspoken sometimes, but I mentioned a couple of things that, you know, I commended her piece. I thought it was very good that someone is from the government is at least coming out and saying, you know, hey, here's an idea. Now, obviously, her constituents need to agree with her idea for it to be voted, but I mentioned exactly like something that you mentioned about venture capital, which is essentially what many of these projects are, and how many of the investors in small cap blockchain are probably not. They may or may not be. I don't know. I've never seen their balance sheet. But I kind of made a joke and said that right now you have ETVC for non-accredited investors. She's like, what's that mean? I go, well, that's called exchange traded venture capital for non-accredited investors, i.e., the cryptos or many blockchains. And, you know, like I said, I got to talk to her briefly and just kind of gave her some commendations, said it was great, and, you know, mentioned my note that, like Samson said, a lot of the issues that I see are that, you know, many are not accredited investors. And I gave her my opinion on the 3-year thing. I go, that is, in my opinion, more than enough time, because most projects won't survive a year if there's not someone behind it. So yeah, I got to speak to her. Excellent, wonderful lady, very intelligent, and I commend her for, you know, putting something on paper and getting it out there publicly.
Yeah, no,
Thank you.
yeah, she's awesome. She came to she guest lectures at UNH School of Law for our cryptocurrency and blockchain law program a couple of times. I think it is progressive, but it's just a heads up to startups and founders and entrepreneurs that it won't necessarily be easier. And so you might have 3 years to figure it out, but you're going to pay the cost.
Agreed. Steve, thanks so much. Samson, thank you so much for the overview. And just another quick note here, Steve, thank you for bringing up your experience meeting with Hester. I was going to bring that up as well. I think from CoinGenius's standpoint, quantifying it and showing the progression there and those milestones as they hit them would be very interesting. And if they're already self-reporting, maybe there's a way that we can, you know, help bring that democratized data to our users as well. There is a ton here to unpack, obviously, but we've got about 10 minutes left, and I'd like to turn it over to Matt to get just a quick overview of, you know, the last few weeks and what you kind of see in your crystal ball moving forward.
Sure. Well, so when I look at the market right now, I see basically momentum. And when you have a favorable, you know, macro environment for like we have for digital currencies right now. I mean, the biggest driver of upside is, just continued momentum. So, in an environment like that, when technicals matter less, and it's just a momentum play, the way I think about it is, what are the biggest things that could put the kibosh on the party, right? For example, one of my favorite money managers is a guy named Jeff Gunlack. He is the head portfolio manager at Double Line here in Los Angeles, and he basically said recently in an interview that the biggest risk to markets is a Sanders win in the election. And look, I'm politically agnostic here, as I know probably Mr. Gunlack is, but from my perspective, the biggest risk to just continued momentum in cryptocurrencies is, I think there's been some recent chatter about Mnuchin setting up a task force to kind of regulate and crack down on cryptocurrencies. And I know that the Trump administration isn't really doesn't have a favorable kind of perspective on cryptocurrencies, and so the halvening's coming up. There's a lot of new interest in digital currencies again from institutional money. So the biggest question is, throw out technicals and the idea of inflows. What's the biggest risk to basically prevent the continuing trickle of new inflows in the space? And for me, it's some kind of headline related to regulation or the Mnuchin tax force or whatever, because right now the path of least resistance is up. And the only thing that I have on my mind is, well, what is what's going to prevent or what could prevent this from happening? So, in terms of kind of what I have to offer right now, that's what's on my mind. Thinking about the headline risk that's out there that will affect this space the most, and I would say that it's regulation and perhaps. A coming new wave of crackdowns by the current administration.
Thanks, Matt. I think it's interesting there to kind of summarize that, crypto's always been heavily driven by sentiment, but even more so in the last, week or two. And I agree with you. I think that sentiment monitoring from positive to negative and back to positive and potentially back to negative again here around the corner. And a lot of that comes down to the news cycles and the saturation of, does the 99% really understand the mechanics of what that means? One quick point before we move forward. Matt, just first of all, congratulations on passing your Chartered Market Technician 3 exam. It's a huge accomplishment. And in that same vein, that's kind of, what we try to embrace, from the CMT3 standards. Can you tell us a little bit around the global financial engine? And, everyone is pretty much universally saying, okay, the recession will come eventually. What do you look for in those triggers? How does that relate to the crypto market? And what should I be tracking, especially as we're moving between here and April, where we're kind of anticipating a shift? What are some of the things that I should be on my radar for 2020?
Well, when you look at markets, so typically the business cycle is about 8.6 years from peak to trough, and we're basically 12, in more than 12 years into a bull market cycle that is long overdue for a recession or not necessarily a recession, but basically what we're seeing is all just financial engineering and less about value creation. So we're more than 12 years into this expansionary bull market cycle, And for me, one of the biggest drivers that I think in the future is going into cryptocurrency is the fact that we have $23 trillion of debt to GDP, and during the last few years, that's increased over $3 trillion. I'm not saying that the U.S. or anyone is basically. The thing is the global economy is kind of insolvent, and when it comes time to raising interest rates and mopping up all of the easy money that's out there, I think that's going to be really a primary driver. Having a insolvent global system, economic system, driving or looking. Everybody's going to be looking for the new place to create a new kind of foundation for an economy. So I think this space will capture the attention of global markets. But also, when you look at the different phases of bubbles, first you have displacement, then you have credit creation, euphoria, financial distress, and then you have revulsion. When I think about where we are in kind of a bubble environment here, like we're definitely at the place where there's this euphoria in the air, but it's untethered from any fundamentals. So when this thing turns, the fact that we've got all this debt out there, we're gonna have a pretty nasty environment out there, and the next recession could be pretty nasty. So I don't know if what I'm saying is kind of disjointed or whatever, but I guess there's some random thoughts for you.
Much appreciated. We'll be kind of watching that as we go through the year and, quantifying all of the indicators there, hopefully being able to automate most of that and give that over to our users. Well, thank you so much, Matt. So for everyone who is still on the call with us, we have a few minutes. Does anyone have any last thoughts for this Genius Wednesday?
Hey, this is Samson. I just wanted to say, I forget who was just talking, but you literally summed up everything I needed to know about the recession when you said that for the last 12 years we've been engaged in financial engineering, not value creation. And I was like, oh, I've been trying to say that for 12 years. So
well, when you look at the global economy in terms of interest rates, it's called NERP and ZERP basically, and it's this current cycle of growth has been fueled with basically free money. So I guess when you look at kind of punch bowl theory, I guess when we take away the punch bowl here from the party and everybody's got a hangover, I mean, it's going to be interesting to see what kind of world we live in.
Yeah, I agree. Thanks, Matt.
No problem.
Awesome. Well, really quickly, we have another few minutes here. If anyone else has any last thoughts, Jeremy, if you have any final words of wisdom for this Genius Wednesday, now is a great time.
I have a lot of background noise, so I apologize. But no, I think this was very well encapsulating of all the different aspects that can lead to volatility in this market. It sounds like, as you can all hear, overwhelmingly things are pushing this in a positive direction. And this industry is definitely being taken very seriously by a lot of folks, whether it's large corporations or governments. And I think that we're just going to continue seeing this grow. I think it's not going to be an easy climb, as we've seen historically. There's going to be ups, there's going to be downs. There's going to be, the bots and the whales that are taking advantage of people that are trading with emotion. And, it's on us here, not only at Coin Genius, but also on our, Discord channel that we just launched to be able to have those conversations, answer questions in real time, and just ideate together. So, we can hopefully always stay ahead of the curve. So with that said, thanks everybody for your contributions. This is great, and looking forward to the next one.
Fabulous. Well, thank you for joining us here for Genius Wednesdays. We will see you again next week. And if you need to get a hold of us, as Jeremy mentioned, you can find Team Genius on the Genius Discord. Thanks so much, everyone.